because when SentinelOne reported at the close today, they delivered some excellent numbers. A nice top and bottom line beat with accelerating revenue growth. We call that ARG, and very solid guidance. All right, my one worry here, the stock's extremely expensive. That said, we're going to learn more about this great story, and so if it does pull back, you got a chance to buy it. Let's dig deeper with Tomer Weingarten, the co-founder, chairman, and CEO of SentinelOne, to find out more about the quarter and what comes next. Mr. Weingarten, welcome to Mad Money.
Thank you for having me, Jim.
Okay, so Tomer, I've got to tell you, accelerating revenue growth is the magic elixir of what takes stocks higher. How are you, in what many people think is a crowded figure, getting accelerated revenue growth for SentinelOne?
Yeah, look, I think it all starts with exceptional technology. You know, we built such a holistic platform to protect, not only endpoints, but also cloud workloads and IoT devices. And that's just, in just very big demand right now. Couple that with, super robust go-to-market that is spanning, complete global footprint, very rich channel ecosystem, which we have nurtured through the years. We don't compete with them. We actually empower them to deliver their services on top of our platform. And you get a very wide reach into the entire TAM, just increasing growth both.
Alright, welcome back to the Big Long here. So, futures are down after the US 10 yield slips from a 2-month high. So, that is signaling possibly the economy isn't coming back stronger than we think, as well as the data that came out today. That is the JOLTS job openings. It increased to 10.934 million job openings. So that means that there is still a lot of jobs out there, and as unemployment benefits come to an end, who knows what will happen in the following months. But just get into it more. Consumer credit grew by 17 billion into July, missed by the 8 billion. Consumer credit's down here, so missed by 8 billion. And does that mean we hit a peak? So back in May, we grew by 25, and then in April, 27. So did we actually hit that peak in consumer credit? Who knows at this moment? This is a volatile economic indicator, so this could change when the next release comes out. So tomorrow we got some job data coming out, continuous jobless claims, as well as initial jobless claims. So this is going to be interesting to see as markets slip today, to see how they react to the job data. Is bad news still going to be good news for the markets, or are things going to slightly take a pull back as the reality of things start to set in? And the reason why I say that is because now unemployment benefits ended. People are relying on those child tax credits, and with the job openings increasing right from month over month, are people just scared because of the Delta variant, or is it because they don't want to go back to work, or are they being overworked? I don't know. There's a lot of variables that could fall into that. So tomorrow, with this job data coming out, that is going to indicate where we finish for the week, as Friday we got some PPI data coming out. So that's it. As GameStop did have earnings today, as well as Rocket Labs. But before we get into some stocks, options today. So some unusual option activity. CMCSA expiration date November, as well as AMD in October. So that is a little out there, just because AMD is a microchip manufacturer, so that's interesting to see that, depending on how their earnings appear for Q3. And then you have SPRT, which I've mentioned in the short squeeze play. So that's out actually for next Friday. So all these are within the next week or two, even this Friday, as well as those two outlying for the further months in the future. And then the most active today: Tesla, Apple, BBIG, AMC, GSAT, AMD, Clove, and Amazon. So options volume was taken by Tesla. As you can see, last change for that was about 13%. And then BBIG was a big one that I mentioned for a short squeeze opportunity. Now, let's take a moment to look at the put to call volume ratio. So you could see the most low one was GSAT, right? And that had the highest percent change when it came to that. But as you can see, the actual stock price did not move that much. So that is showing that all the options weren't exercised, and there wasn't enough buying pressure on the equities to move that stock price up. But as we get closer to Friday, who knows, that that stock price could start moving up, as we definitely see some volatile at the end of the week as options expire. So the highest implied volatility options, SPRT again, and the remaining are all BBIG. So that implied volatility is kind of wild. That just shows you how quickly a stock can move, and also how quickly it could drop off in a blink of an eye. And then we have index put the call ratio at a high. It keeps on pushing up higher and higher, so that's something to definitely keep your eyes on, as equities are still low, still bullish, 0.43, and total put the call ratio at 0.87, still bullish, but not extremely bullish. So that's something to keep your eyes out on. Now, as we get into the stock, so the SPY, right? The SPY hit an all-time high at 454 on September 2nd. Since then, we have seen somewhat of a little drop off. And to me, this is showing some weak price movement. One, because of the volume, and two, because we are consolidating here, and there's some resistance at that 453 level. And then we came back down to test the trade line finally, as well as the 20-day moving average. So what I labeled out here is the times that we came down to test, as well as the days of red followed by a green day. So we tested the 50-day moving average once, and then twice, and then 3 times, 4 times, 5 times, 6 times. Yep. Not 6 times, 5 times. And almost got it right here. So with this being the 5th, or no, not necessarily the 5th, but with this making this downward momentum movement right now, if this is strong support, I mean, we could see a pretty decent pullback to about 442 depending on how strong this 447 level is, considering that that was the pre-all-time high. So as we get lower and lower, you can see that actually the MACD is showing a signal of bearish momentum, and that could change in a day. As you can see, that has happened in the past, and then the next day we've went on a green run. So this is something to just be mindful about when you're looking at certain stocks or looking at ETFs. You just want to be mindful of where the price action is heading towards in the near term as well as the long term. So we have the 200-day moving average, 50, 20, as well as the 9-day. So let's get into the triple Qs. So triple Qs here. Now you can see we hit an all-time high actually yesterday, and then today we pulled back a little bit, and that probably had something to do with the treasury yield. It was at 1.37 around 3 o'clock, dropped off, and I believe it's around 1.34 right now, or 1.32, around that range. So that pretty much affects growth stocks, and the triple Qs follow the NASDAQ 100 stocks. And this will be a key indicator of what will or what can happen with the single stocks that are in the ETF. Now, it doesn't necessarily mean that all these stocks in this ETF are going to go red. There will be winners and there will be losers, just like anywhere else. But in terms of tracking certain sectors and stocks, ETFs and indexes, that's the way that it has to be. So right now you can see triple Q is down in after hours, hugging this 9-day moving average as we did break away. So if we do see that momentum come downwards, definitely going to see a test of around, I'd say, 375, and I mean that's a $5 pullback, so that's a pretty decent decline if you want to get technical, like with all the other sell-offs or pullbacks in the market that we've seen so far in 2021 have all been followed by a strong dip buy. And what I just don't like here is, as I zoom out, right, is this is what I mean about knowing the levels and support, because as we're getting higher and higher, moving up. Now I'm going to make 2 here. Now we're forming a little wedge here, which is showing this high support level of resistance at these levels, and we're not necessarily making it there. But who knows, tomorrow could come around and triple Qs could just have a day. So I'm just being cautious because of the volume on today's day, because the past 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 days, right? So 10 days the volume has been below the previous, well, 2 previous all-time highs. So that's something to be mindful about when you're actually looking into where to put your money at a certain place of time, because as we look back here, right, between this period of March to May, these 2 moving averages crossed over, which signaled a bullish breakout, and that is exactly what happened, right? And then it crossed back down and it went downwards, but then it hit this level of support, which we could say it's roughly at 316, 317. So the fact that we came down there, test that support, which was right the previous resistance. So the fact that this was previous resistance that should come down to being strong support, and it was. We tested it 2 times and bounced back off of it. And then you see the trade line actually cross back over the 20-day moving average, signaling the bullish breakout. So as we're hugging this line right now, as we're moving upwards on lower volume, and this red day right here, as we're getting more economic data, this is something to be mindful about. Now let's go in a couple stocks. So BBIG is one that I called out earlier. So if you paid attention to my videos, I've been going over a lot of short squeeze stocks due to the fact of quick profits, but it's a very volatile game. So here we're looking at the daily chart, BBIG. You see that on August 27th we had a major breakout above the 50-day moving average, signaling a bullish momentum breakthrough. So when that happens, that is a good sign of getting in. But you have to be mindful of the pre-signals, as back here the trade line starts creeping up as the MACD is going or signaling a bullish momentum reversal. So the fact we broke out and then we actually held here the next 2 days, we came back and we tested that previous high support. So like again, resistance comes support. And then I built a little wedge on the 4-hour chart. As you can see, it's on the daily. And what did we do? We came back down. The trade line actually caught up on the 3rd, and we ended up holding the previous support of where this little line is right here. So the fact that we held that line and the next day we followed up with a big green candle, that, I mean, right, you have it right there. Nothing was changing. But if you wanted to get in the nitty gritty of things to make sure that you know what you're doing, is you got to break it down. So like I said, here's my wedge, right? So this was the price of change, right? You could kind of say every time we got to this line, it was either resistance or we broke through it and made a move upwards. So finally we broke out of that on, what is this, the 7th, aka yesterday. And then the last hour of the trading session, we made a big move upwards, and then again. So as you can see, this is consolidating. Moving averages only work when there is a clear identified trend happening. And so when this actually crosses over the 50-day moving average as well as the 20-day, this signals a very, very bullish move, as well as the RSI moving upwards and the volume oscillator showing that price action really moving. So that is how to break it down when you're very unsure of a certain volatile play to get into. And one that I've been eyeing that I called out the other day, I mentioned on the 3rd as well as yesterday, if we didn't hold this support level, we were definitely going to come back down and retest that 78.6 fib line, so $9.04, and we actually broke through it. So even here now you see that the trade line is making a change downwards. So what this is showing me right here is a cup and handle, and we had a slight pullback to that fib line. And then what we want to see is what's happening behind the scenes. So as we break this out, right, we have a slight cup and handle happening right here. So we got this, we got that. This is a pretty wide cup, right? The handle we got coming down here. So the trade line on the 4-hour actually broke through the 20-day moving average, signaling that downtrend as we're speaking. But it seems as it caught some support at $8.90 at the moment. So pre-market, after market hours, you gotta take with a grain of salt, just because it's after hours. It's not the same as during the day. It could be a bull trap or a bear trap, so you just got to be mindful when you are making a trading decision. You got to make sure you follow your plan. So we actually came back down here, and now if we do hold here and we do see a little reversal upwards after this pullback, I could definitely see myself getting into this, just because of the long-term benefit that I see Hyzon being able to bring to the markets. So hopefully the 20-day moving average and 50-day moving average hold as support, as it seems like the 20-day has. So that is a stock that is on my radar. And another one that is also on my radar that I've been talking about is ATER. So this is another little short squeeze play, as here you could see it's been in a downwards trend ever since back in March, and now we finally just captured the 50-day moving average on today's candle. And this is where knowing technicals and how things work, right? So the MACD is signaling a bullish signal right here. As volume starts to increase, the stock price starts to increase, and you can see the RSI and volume oscillator go crazy during these days. So that is signaling some bullish momentum. As you can see, the stock price is going up, and it's a green candle, so this is bullish. And then as the trade line holds support, crosses the 20-day moving average, it consolidates, right? This is a little, let me get rid of this. So this is a little bull flag right here. As we broke out, we consolidated, right? So that previous high becomes support, and then we consolidated, making lower highs and higher lows. And then as that happens, boom, we break out with some serious volume. As you can see, the RSI and the volume oscillator pushing towards that higher area in the indicator. So this is something definitely to keep your eyes out on, as we do have, well, we just filled the gap here, and the fact that we closed right around it is a good sign, because on August 30th we opened at $8.88, right? Hit a high of $9, but then we closed at $6.62. So that was showing a very strong support there. But today we made a strong move upwards, hitting a high of $10.47, which we haven't seen since July. So this bullish breakout right here, this was a good signal that hopefully more buyers are getting in, because even prior to when it did rise more and more, the volume is very, very increasing. So this is another one that I actually was looking at today, just because I missed this one, and so I kept this on my list and wanted to actually do this live this morning, but I couldn't. So what happened was I put in a buy limit at $6.35, and we ended up hitting a low of $6.09. As this level of support, I was able to find just by the fact that the previous days where the low has been, we have bounced back. So the fact that we had a red candle on the 3rd and the trade line caught up, we held the trade line, and today broke out strongly while it's up 17% today, and in after hours it is currently moving. So let's just break it down a little further. So 4-hour time frame, this is what I'm talking about. So I was able to identify that there was strong support around these levels just because of, one, the fib, and two, breaking it down as I understand the indicators that I use. So the trade line finally crossed over the 20-day moving average pre-market Tuesday, and then we found support back around $6.11. So the fact that we came down and we tested that 50-day moving average on the 4-hour, that was strong support there. But then once pre-market was over, what I say, you got to take everything with a grain of salt, as now the MACD is signaling a bullish reversal. The MACD hasn't crossed over yet, but it's looking like it's trying to make that move upwards, as the RSI is pushing higher, as well as the volume oscillator. So now, as we're heading into the end of the night, markets close at 8 p.m. and NE is still pushing higher, which is a good sign for tomorrow. As you can see, the trade line's trying to cross back over that 20-day moving average, showing that the momentum is changing upwards. So another one that I called out was because of Vortex on Twitter. They mentioned Clove. So this is what I mean with, you can't always listen to everything that you see. I didn't make a play on here, but this was on my watch list just because of the movement I was seeing in pre-market. So yesterday, right, we had a huge jump up. As you can see, the trade line, let me fix some of this. So as you can see, the volume was really nothing, and we were hugging that trade line for a few days, as just yesterday a bunch of buyers rushed in, or short sellers closing their positions, pushing that stock higher, and then the aftermarket's pushing it lower, and then market opens, passes down that trade line, as well as getting to the 20-day moving average, where it seems to show support, where the previous resistance is now support. So hopefully this turns around. As you can see, the MACD is signaling a bearish momentum change. So this is something that I'll be watching, as it is down 12.5% today. If it does have a big move tomorrow, this could be another one to watch, as we did recapture the 20-day moving average on the daily, which is a good sign. So tomorrow I could see this stock actually taking off, because that is a really good indicator. But we could have another pullback, and if we do have another pullback, I'm looking at the same level of support at $8.84 to hold, or $8 and about 30 cents. So tomorrow, with some economic data coming out, we had a somewhat of a red day today, but it wasn't terrible. I mean, you can't always go up for so many days in a row, right? So as long as we hold this trade line and tomorrow come back strong, that's going to be a strong sign in the short term, near term. But if we do go lower and we test the 20-day moving average, to me that is going to signal that we might see a pullback to about 445. And if we do, will the dip be bought this time again? I mean, we're really testing the waters here as we get tighter and tighter on this wedge, as we're touching that top 1, 2, 3, 4 times in a row, and then the next day we break down lower and lower and lower. So this could be setting up for a stronger move upwards, recapturing all-time highs, or we could push lower, signaling a little pullback just due to everything that is going on right now. And having a healthy pullback isn't bad, but necessarily no one wants to see red. So that's what I have today. Tomorrow we'll see what the morning has in store. Thank you for tuning in, and go long.